You're tuned in to Agriculture Today. I'm Chevy-Lynn Vaske. We begin our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for taking the time to join us today.
Yeah, thank you, Chevy-Lynn.
Daniel, can you give me a brief overview of the market?
Since we talked a week ago, not a lot has changed in terms of the weather outlook and how that feeds into the production forecast. In fact, in the Western Corn Belt, we've caught some rain, and that's been positive for crop prospects. When we'll have new information on crop ratings coming out on Monday, and so far we haven't shown any real risk or any real worry in the market. There have been, as I watch weather maps, there's some dry areas in the three I states, particularly in Illinois and Indiana, and it varies depending on which map you're looking at and how sensitive they are. But there are some areas that I've heard climatologists that are involved in the crop side as they've described as pockets, small pockets where things aren't as tremendous, but so far I guess we haven't had any major weather pattern that's really caused us to worry a lot about crop development or where we stand, at least for corn. And then the adage generally still holds true that we make or we understand, the markets understand that July weather is really important for corn development, for tasseling, for the beginning of ear fill and all of that, for pollination. Now, and what can happen in August still could come in and do a lot of have a major impact on the U.S. corn crop if we turn really hot and dry. 100+ degree temperatures for extended period of time, that would still affect things. But we're through the major part of the reproductive phase of corn and generally setting pretty well. And that I think that's why you see D's corn futures that closed yesterday at $4.20. And if we were really worried about the size of the crop, the markets would be a lot closer to five, if not over that. Well, we're pretty conservative with regard to prices right now. And for soybeans, we're most of the time we're looking towards August as the month where flowering pollination type of reproductive aspects of that crop occur. And so we're really entering a more vulnerable phase for soybeans. But again, you look at soybean futures for November, 10.24 and a quarter. Again, not $12, $13 if we had any crop risk. Also not $9 or $10 if we really saw things fall in terms of supply demand balances, them growing, et cetera. So we're setting for our major crops. And I guess, and I'd throw grain sorghum in on that in Kansas in pretty good stead. No real worries yet. We're still not even into August, so it is too soon to really to put these crops quote in the bin. But we don't have any worries at this time, and the markets are pricing these commodities with regard to that perspective. And for wheat, here for U.S. hard red winter wheat, which is what we're mainly worried about in we're focusing on in Kansas, harvest done essentially, and we've turned our attention to the demand side, to usage. And if as time allows later on, we may come back to that and talk about some of the export strength we've seen of late.
What are the cash markets looking like?
Yeah, the uh, well, when you have markets that generally aren't worried about production risk, they're not really that high. They're we're seeing cash price levels that generally cover. I think in general we can say they're destined to cover, if nothing changes, cover direct cost and may not cover full economic costs. The other side of that coin is if we do have large crop yields in Kansas and elsewhere in the U.S. and have more bushels to spread our fixed costs out over, then we're in a better shape we're in better shape if that occurs than to have low prices and just so yields. So if we are going to have large yields, then for farm as farmers are looking at the best revenue they can get, there's two sides to revenue from the private side anyway, with excluding insurance payments or government payments, government support. It's to have lots of bushels and as high a price as you can get. If we're kind of destined to have just a so-so price, then we hope we have lots of bushels, and we'll see where things go. I would say we just got done with wheat harvest, and we've got some we really have variation around the state on wheat. You have the high prices of 533, 531 in Salina and Hutchinson, 508 in Topeka, and then elsewhere around the state, it's closer to 450. So no surprise that we have the highest prices in the central part of Kansas, where the main rail systems as such are, and that does feed into the the strength we've been seeing, particularly in wheat post harvest, and generally low prices, helping to spur on movement for the week ending July the July the 17th. Data just coming out on that yesterday. On Thursday, it always trails by a week. We had for the U.S. about just under 28 million bushels of wheat actually shipped, and we need about 16 and a half to meet the USDA's projection. So that's great news. For hard red, we had just about 12 million bushels shipped, and we need about 5 to meet the USDA's projection. So these are big times in terms of wheat export movement. Even hard red spring wheat had about 6.4 million bushels, need about 4.7 to meet all that. So I guess I'd say in closing, so we're sitting here right now, we're just about to August 1st. USDA surveys to farmers of what they think will be their production numbers are going out to represent around the August 1st, plus or minus a few days, and then we'll have the August USDA August production reports and the WASDE reports all coming, and that'll be released on August the 12th. So as farmers look to the next time frame when we're likely to have a lot of volatility in the market, probably around that next set of USDA reports coming out on the 12th. So we'll see where we go from there. And as we speak, just to close, we hear more news about the possibility of different sales of grain going on. I guess I would say that we kind of go back to the old adage of the best cure for low prices is low prices, because it starts to spur demand, and it looks like we're starting to see some export demand coming along, and in response to some better buying opportunities for foreign users of grain.
Daniel, you've talked a little bit about wheat exports, and we've heard some news of strong wheat exports. Can you talk more about that?
Yeah, the uh, the balance or the challenge in the wheat market is to see how the U.S. stacks up with other sellers on the world stage. And generally, we're looking at pardon me, Russia or Ukraine, as out of the Black Sea region as kind of world leaders, world price leaders. They need to sell grain to generate cash. And we're paying attention to Canada as another export competitor, Australia as another yet. So you've got lots of things happening. There are some rumors of droughts in some of these areas, particularly in parts of Europe, and the tariff issues that are at play. And here within the last few days, we hear I think Indonesia, Japan, other countries making relatively competitive, more positive agreements with the U.S. in terms of tariff rates. I think generally that's around about 15% from what I've read in the news anyway. So I think part of the issue with trade that's held the markets back from getting very excited has been that these uh, well, that we don't know how things will finally end up in terms of favorable versus unfavorable rates, who's on the positive side of the U.S., who's not, and and so that uncertainty is one of the factors that's been keeping all the commodities lower, and has certainly affected us on the wheat trade side. We talked a little earlier about pretty strong movement for hard red winter wheat and some of the different classes. So um, so I guess low prices on the one hand, a little bit cheaper U.S. dollar because of uh, federal financial policies, all helping us. So anyway, so overall for wheat, the last thing I would say is that it'll be a challenge it'll be a decision for Kansas grain elevators to make. Do they want to store this wheat, or do we start to see enough strong enough signals in some of these areas where we actually sell it, are enticed or see it as profitable to sell that into export channels? So that's a better problem to have than just having wheat sit there and and uh, and hopefully accumulate storage returns and not have any export markets. So a little bit more of a positive spin on our current large crop situation.
Daniel, I appreciate you taking the time to join us today.
Thank you, Chevy-Lynn. Appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more for you up ahead.